All right, hi, this is Shari Frasure, and I'm with Keller Williams, Greater Lexington. And I have with me today Tenia Debord with Wells Fargo Mortgage. And we wanted to talk to you today about rural housing and what the options are there, and just to discuss why you would even want to consider rural housing. There are some limits. There are some areas that won't qualify for rural housing, and we'll talk a little bit about them and how you can find out. Hi, Tina, how are you doing today?
I'm great, Shari. How are you?
Doing wonderful. I'm really excited about this. This is something that has been around for a long time, but not everybody's aware of it. And I've used it a few times. It can be a little bit complicated. There's certain things that have to be met, certain criteria. And I'm just going to let you talk about that and go from there.
Certainly. And of course, this is near and dear to my heart because I'm a Eastern Kentucky, rural Eastern Kentucky girl, as you are as well. So this program is, in my opinion, one of the better programs out there for home ownership, especially if you're looking to purchase in a rural area.
Mm-hmm.
It is not a farm loan, as some folks would would not think that, because it is a USDA loan. But anyways, it can be cumbersome. There's a lot of documentation required,
Mm-hmm.
a lot of information that has to be gathered from the client. But if you have had some experience with it, those two are my favorite loans to absolutely do when it comes to government loans, or
Mm-hmm.
pretty much any loan. They give people an opportunity to get into a home that may never have had or would never have the opportunity.
Mm-hmm.
So it is a wonderful program. And as you said, there are some restrictions as far as income. We call them eligibility. Eligibility based upon the area in which the home is in, eligibility for the client. I think if there's only going to be the husband on the loan and the wife works, that her income doesn't count, but it does. Keep in mind household income. So if you've got, say, husband and wife are working, they've got a 18 or 19-year-old child at home that is earning income, that income counts toward that eligibility. So that's things that you need to keep in mind. Is it does include entire household. It is.
Okay.
It is.
Let me ask
say
a question about
an elderly parent living with you, as I did earlier last year.
Okay.
That income that they're. What did you say?
I was just going to ask you. So I know when it says rural housing, we all think of farms, right? So
Right.
This is not a farm loan. It is actually a housing loan, right? I mean, like you have to have a house on it. You're not going to just purchase the land.
Exactly.
Yeah,
Exactly.
I think that's what kind of I've always kind of like, that it makes sense to me if you're going to call it a rural housing, but it has housing in it. So then, but again, I just wanted to reiterate. And another question that that I just thought of, so you can count all income. What if it's a farm income? What if one party's farming?
That's the other thing is if they're farming, you can't own another piece of property and do a rural housing loan.
Okay.
Okay. So if that's their sole source of income, is they're a tenant farmer for somebody else, then of course that income is going to be their income that would be used in qualifying. But you can't own another piece of property and do rural housing. The only exception to that is very, very rare. Is say the family has all of a sudden increased, additional family members have moved in, and the home is too small for them, and that requires an exception, and that can be done. But of course, this loan cannot be used to help you build a portfolio of investment property, so to speak. So,
right.
But for instance, if you have raise a garden, or you raise some kind of an animal on this piece of property, and if you're going to have some income, that income does go into eligibility. So
Okay.
that would be
That's
something to take
interesting.
into consideration. Yes. Yes.
Okay.
So they had very used to, it wasn't too awful. I mean, I've done loans with land as much as 10 acres on, on rural housing. Well, they changed that a few years ago. So it can't be minimum. It can't exceed minimum housing, what would be, just considered housing. So one of the things that they talk about is if it's got farm service buildings on it, that may pose a problem, cause some issues. I had a home a few years ago that was like 5 acres, and it had been a part of a larger farm. And there was a silo and a milk house. It had been a dairy. So there's no way that you're going to use a silo or a milk house on 5 acres of land, right?
Yeah, exactly.
So it's not going to be used, and it would just happen to be that was on the property. We didn't have any trouble getting it done, but I've always kind of said if it smells like a farm, it is a farm. So that's kind of one thing you need to keep in mind with this. If you can smell the horses and the cow manure or whatever in the barn, it's probably not going to work.
That's hilarious.
It's just something to keep in mind. You gotta,
Right.
I know, but it's true. The big thing, I think, as far as from a realtor's perspective, if you know somebody is looking in that area, there's a website that you can check to see if the property is eligible for financing, eligible for rural housing. So that may keep you from getting, if you know they're going to. Sorry.
Can you tell us what that website is, and can the public access it?
They sure can. It's USDA and single family guarantee loan.
So you had to put all that's in the web address?
And I don't have the website on it's right in front of me. I should have done that, but I didn't. I made some other notes. But if you go into the USDA website, or Shari, if there's folks that want to reach out to you, I will forward you an email.
That'd be great.
Connection.
Yeah.
And then that way if they want to reach out to you for that, I will forward that to you, and then that way you've got the information that you can help them with that.
Okay.
But yeah, it's out there to show eligibility. I always kind of rely upon the realtor to make sure for the client to have that.
I mean, it's easy to do. It's just though I'll get the website. You can send that to me.
Certainly.
And I'll put it on this video.
I will email that to you.
Yeah. And it's interesting that one of the things that I've always thought was extremely strange is that, of course, they haven't redone the I guess the boundaries in years, but like Clark County, only part of Clark County is considered rural housing, and there's one subdivision between Winchester and Lexington, Clark and Fayette County, that qualifies, and that's a really small little community. And I don't know how that ever happened, but you can still do rural housing loans there. But then it's outside of, I guess, the new bypass there. And a lot of you won't know what we're talking about, but the reason I bring that up is that all of Nicholasville, if I'm not mistaken, and all of Georgetown, Scott County is considered rural housing. And if you go by demographics and property values, definitely, both of those counties have higher property values in town specifically than Winchester. So,
absolutely.
But you can't get a rural housing loan inside of the city limits in Winchester.
Yes. And the same thing happens in Madison County. There's a block in Madison County is the same way. Part of Franklin County is as well. So that's kind of the thing is when somebody is looking, one of the first things I do is to make sure that the property that they're looking at is eligible. That's one of the first things. If it's not eligible, there's no need me looking at whether their income is eligible or not. So I mean, that's just the facts. There's no need. You can't fight that. But that's the thing with Clark County is you know, there, and then the crazy part is when you go out Colby Road,
Mm-hmm.
Road is rural housing. One
Uh-huh.
side of the street's rural housing, one side of the street isn't. It's the strangest thing. So it's real important that they reach out to you. If somebody's qualified for rural housing, well, they need to let you know that up front as a realtor that, hey, I'm wanting to do rural housing loan, so that you're not showing them something that they don't, can't do, for instance.
Yes. Yeah.
And
And that's just something that I have learned over time. Rural housing
exactly.
loans were really popular when I first got into real estate, and it just, there was a lot of eye-opening situations where I thought, well, this is a no-brainer that this is rural because it's outside of the city, but that's not necessarily the case. But in newer agents that's never dealt with them, especially if you do primarily residential inside of like Fayette County, because none of Fayette County is rural housing
Exactly.
qualified, but you wouldn't even think about it because you don't really have that that buyer normally. But if it happens, then you're kind of like totally in the dark. But I did learn that over a period of time. So Tina, why would anybody want to use a rural housing loan? I mean, give me some scenarios where it would be a good idea.
Well, first of all, you're not required to have a down payment.
Mm-hmm.
If you have a down payment that's equal to where that you would not have mortgage insurance, 20% down, you wouldn't be able to do rural housing. Okay. So this loan would come into play when somebody has got some down payment, but they don't have enough for 20% down, and of course within the income and all that. So that's the key, is you can do 100% financing, and that's way cool. The other thing is that there's not what you would say mortgage insurance on it. There is a guarantee, upfront loan guarantee of 1%, which can be financed into a loan, and then there's an annual at 0.35%, and that's all figures. But basically, what it amounts to is you're going to have to pay something similar to mortgage insurance, but it's called a guarantee fee. But it's considerably less than, say, traditional MI on like a conventional loan or FHA. So it's a much better deal in that regard. It's that, in my opinion, the best thing is the down payment situation.
Yeah.
I mean, if you're doing FHA and you're doing 3.5% and house qualifies for rural housing, I mean, that's pretty, it can make a big difference in the monthly payment for some.
Yeah, and the mortgage insurance is higher on FHA too.
That's the key, in my opinion, is that's the big deal, is the difference in down payment and the monthly fee that you would be charged for not having. Yes, it is, considerably. The good news is, and of course there's always an income cap with this loan. The good news is, as of May the 4th of this year, they increased it for all of Kentucky from 1 to 4 counties, for families of 1 through 4 people, it's now $90,300.
So that's
it was
maximum that they can make to qualify.
I think, somewhere in there.
I'm sorry, we've got like a little
pretty good increase.
Yeah.
And I know that it seems kind of maybe low, but if you've got children and they have child care, then that child care expense is deducted from your effective income, your gross. So for a lot of folks,
okay, Tina, we're hanging up really bad.
A
lot of that didn't come through. Yeah, I can't. We can't.
Family, are you there?
Yeah, you're just hanging up really bad, and
Or
we
car
didn't
maybe
hear
interfering.
half of what you just said.
Are you back with me, Shari?
Yeah, I
I
can
think
hear
what
you, but huh?
I got you.
Yeah, this is not coming through very clearly, and a lot of the stuff's getting lagged, so it's not. We can't really understand what you're saying.
I got
Um,
you.
Yeah, so we may have to redo this one, but I just want to say that if anything, you have any question about any of this stuff and it's not coming over on this video, just please get in contact with me or Tina. Tina's information's right here on this flyer that we're talking about on rural housing, and you can contact her there, or you can call me at 859-229-5945. We'll go ahead and talk a little bit more about it and see what we can accomplish, but for the most part, the income limits is, I think what you were talking about was 94,000, or it's the
It's
maximum they can make to qualify.
It's for a family of 1 through 4,
Uh-huh.
up to 4 people. It's $90,300.
That they can make, and that's with after their deductions on their income.
That's if they have child care. It is the only deduction that they can
Okay.
take.
Okay. See,
Yeah.
that's what we didn't hear. So
Yeah.
if you have a household income, 1 to 4 people of 90,300 and something, and you have child care expenses, you can deduct those from your total, but that's the
Yes.
maximum you can make to qualify for this loan.
Yes.
Okay. All right. So that explains that. So is there a limit on the amount, on the purchase amount that you can make?
There's not. That is really driven by the debt to income ratio.
Uh-huh.
The max total ratio, including house payment and other obligations that you have that wouldn't be included on your car payments, student loans, that stuff. The max is gross 41%. Gross 41% of your gross income.
Okay.
So that really determines the max as far as the price.
Mm-hmm. Okay. All right. So would you be able to use one of these loans if you wanted to build a house on an existing property that you own?
That would be something you would have to go through. I mean, you'd have to, it wouldn't be a construction loan that we could do.
Mm-hmm.
If you're looking to do one, USDA may offer financing for that, but because it does require draws and stuff like that, and Wells is not a banking, we don't have a banking location, so that's not something that we will handle. But if you've got a new construction, if somebody, say a builder's built a spec house, right, then yes, you can do financing on that.
Okay.
Or if a builder carries the note, we could do the
and then
loan.
you could do it after it's completed.
Yes.
Okay. All right. So then, as far as alternative types of credit resources you have here, history of rent, utility bills, and school tuition payments.
Right.
And all of those, except sometimes I think people have a little bit of trouble getting their history of the rent if their landlord doesn't readily provide it, but that's something that they can use. And then if they've paid their utilities and all that. What about like your cell phone bill?
That can be used as well, as long as it's not a prepaid. A lot of people use prepaid phones, and that doesn't qualify.
Okay, that makes sense. Yeah. So it's basically anything that you make payments on.
Your utility bills, and to me, a phone's a utility bill, or internet considered utility bill.
Okay.
Yeah.
What about like is it credit score driven?
It is.
Okay.
It is. For us, it's a 640 minimum credit score. 640. There is some exception. Okay. There is some exception within 10 points. If you're, say, a 630, then we can potentially ask for an exception. And there's a few things that we have to do to get that, but it's something that we can request.
Okay.
Having no credit score is where the alternative credit would come into play. That, or say you've only had one history of, one thing that you paid that showed up on your credit report, then alternative credit references would be needed.
Okay. What about self-employed?
Self-employed is not a problem. You just got to be able to document 2 years receipt.
Okay. All right. So, is there anything else that you think would be a good information for the public?
It would be no in-ground pools on a rural housing loan.
That's interesting. Okay.
Yeah, you can have all kinds of above ground, but you can't have in-ground pools.
What about if you add it later?
Well, they're not going to be able to come in and make you force you to recharge.
So you could do it, you just couldn't put it in the loan.
Yeah. And that's the other thing. A lot of people, you know, in this day and age, we don't hear a lot of it, but you can finance up to 100% of the appraised value. So that's, you know, we're not seeing a whole lot of appraisals above the asking price in this market, but that's something to kind of keep in mind, that you can finance up to 100% of the value of the property. So
you can?
You can, yes.
Okay. What about manufactured homes?
You can do manufactured homes if they're brand new, and that would be kind of a construction deal. But of course, the actual cost to do, you know, prep and all that stuff, that would have to be on the construction loan with the manufactured home dealership. And a lot of places do that. But you can do a new one if the manufactured home has a current rural housing loan on it. Then whoever's buying it can do rural housing on it if they qualify.
And that's a used one that's already.
That's a used one that's already in place.
And does it have to be a permanent foundation?
Well, that's the thing. Rural housing, if it qualifies for rural housing the first time, unless they've made modifications to it, it should qualify the second time, because it had to be set up in accordance with rural housing's guidelines.
But like if it was a new one, it has to be on a permanent foundation.
Yeah, they have guidelines for rural housing use of you know, for new construction manufactured homes. Yes. Okay. And because it's been a while, it's been done one.
Okay. But no single wides and no used ones that are not on a permanent foundation.
Right.
Okay.
You're gonna find very, very few homes, manufactured homes, that are set up with a current rural housing loan on them. You're just not gonna find very many that are listed for sale or offered for sale. I mean, that's a pretty rare case, yes. Right.
That's true. One of the things that I'm just curious about is that people, whenever I've seen some listings that actually say modular homes, and to be a modular, it can't come in on a trailer, like on wheels.
Yeah.
And it has to be built in modules in a factory and then erected like a stick-built home. But people get that confused really often. A modular home would not be a problem for this financing. Is that correct?
No, a true modular home is not a problem for this at all.
Right.
That's not. If it's had wheels attached to it
and had a title.
It is not a modular home.
Yes.
Or it's not. Yeah. There's a difference, and a lot of folks don't know the difference.
Yeah, and they're not very common here, and I guess that's the reason that a lot of people don't really understand the difference, because modulars are they appraised just like any other stick-built home.
Exactly.
And they're made in a factory, but they're not, like I said, they're different specs that you have to build them by, and they're actually really nice homes.
They are
not very common, so people get that confused.
Exactly.
Often.
And they're built to set on an actual perimeter foundation, where manufactured trailers, double wides, whatever you want to call them, they're built to be sitting on piers. That perimeter thing around any true modular or manufactured home trailer double wide, that is fancy underpinning. That's all that is.
Yes.
because the support of a manufactured trailer is designed to be supported on piers on those I-beams, where you know, you may have a metal I-beam on a true mod, but it is really set up and geared to have that perimeter support like a stick-built house.
Right.
So
yes,
there's a couple of things that people don't realize. There is a subdivision, maybe two, in Winchester that actually have modular homes in them.
right.
Most people had no idea, but most manufactured home lots, also mobile home lots, also offer true mods. They are a little more expensive, but in the long run, it is worth your money.
I agree.
And just the savings and insurance, savings and insurance, the appreciation versus depreciation. I mean, if you're wanting to get into a home quick and you're building it in here, that's the way to go. I mean, if you're going to do modular, or if you're wanting to build quick and get it done. But a lot of people don't want to pay that added expense, but to be perfectly honest with you, they pay that over the life of the land.
Right.
When
that might be a really good topic for us to talk about in the future.
And the interest.
Yeah.
Okay. It would be. But yeah, I mean, that would be something. A modular would be a true thing to think about. There's one on Flanagan Station that most people have no idea is a modular. I did the financing on it years ago, but it is a true mod.
Yeah, there's one out on Kidville Road too that that I basically represented the buyers on years ago, and it's a 2-story, and there's just no way that anybody would know that was a. Is
it on the right-hand side as you go out Kidville?
It's actually on the left if you're coming from Clark County, but it's right on the Montgomery County line. But it's a nice home, and that is another thing. And that, like I said, maybe we'll talk about that topic on another call. But I wanted to ask you, so, you know, I understand that the veteran, you know, their loans are 100% financing as well. And there are some differences here, but when would it be, would a veteran be better off to do a veteran's loan as opposed to rural housing?
To be perfectly honest with you, if a veteran is 100% service-connected disabled veteran, they're better off doing a VA loan because the funding fee is waived.
Okay.
Say you've got a veteran that is wanting to buy rural, then and they aren't service-connected, and they may have used their entitlement more than once. That entitlement goes up as you repeatedly use it. You know, if you sell one house and you buy another one, sell one house and buy another one, every time that you use that, the amount goes up. So subsequent use of your VA loan can turn into some money as far as that funding fee that is required on a VA loan. So this would be a good alternative if it's a qualified area.
That's a good point. Which leads me into our next conversation. I'd like to talk about veterans loans.
Oh, absolutely.
I know that you're really familiar with those, and you've done several of them, and I've represented and worked with lots of veterans. So I think that's definitely a good topic for us to talk about next time.
Oh, great.
Is there anything, Tina, that you want to add that you want people to know?
No. Yeah, don't just think that there's only loans for the families of 1 to 4. When you start going from 5 to 8 people in a family, then the eligible income goes up. If you got 5 up to 8, it's $119,200.
Oh, okay.
So, yeah.
Yeah, I was under that impression too when you said 1 to 4. So.
Yeah.
Okay.
No, it goes higher than that if you got more than 4 people in the family.
Okay, great. So how would everybody get a hold of you? I know we got your information up here, but you can just tell them too.
The easiest way to reach me is my cell phone. It's 859-771-8707. And I'm all over the media. I mean, social media, if anybody sees.
Right.
I'm on Facebook page as well as I have a website. website, but the easiest way to get me is through my cell phone, text, voicemail, whatever. But
Yeah.
if you got questions, I mean, you reach out to Shari if you can't get a hold of me, and she'll find me. She'll track me down.
You're always very, very easy to get a hold of. This website here, they can actually apply online there. Is that correct?
Yes, they absolutely can.
Okay. All right. Well, I really appreciate your time, Tina. This was a lot of good information. And like I said, if you do have questions and you weren't able to understand Tina because of the lag in the internet, then just get in touch with one of us. My name is Shari Frasure with Keller Williams Greater Lexington, and you can reach me anytime at 859-229-5945. You can also look me up on social media, and we're easy to find. So both of us are very full-time active people that love what we do, and we would love to help you. If you have any questions, we don't mind if you just need some information, even if you're not looking to work with one of us. We'd still be glad to help you. Really appreciate it again, Tina, and we will talk to you next week.
Truly my pleasure. Thank you, Shari.